Welcome to David and David on Real Estate. Join us as we explore the ins and outs of the real estate market.
Good morning and welcome to the David and David on Real Estate podcast. And today we have Jonathan Hacohen with us one more time, special guest. Jonathan, always a pleasure to have you. Love those big guns. Keep them coming.
And pleasure as always, David and David. Thank you again for having me. And David Korman, welcome back. So many angry comments in the chats where they're saying, "Who's this Jonathan guy? We need David Korman back." So thank goodness you're back.
Yeah, well, you were nominated as a David for a week last week. You're officially a David on David and David. Now you're back to Jonathan, but thank you very much for doing the podcast last week with David. I'm sure it'll be a fabulous podcast for everybody to listen to and watch. And I'm happy to be back and happy to have you back on with us because we didn't finish this topic a little while ago on assignments. I don't know if we'll ever finish it. There's so many issues, but we're going to take another stab at it today and try and pick up where we left off. And great to have you on with us again, chosen lawyer.
Thank you. And it was actually, thank you. We can talk about what's been going on in the news, I guess. And the fact that we didn't finish it is actually a mixed blessing because life changed with assignments since we did our last recording. So we would have had to do this one regardless. So it all worked out well that way.
Right. So we can work in the update a little bit today as well.
So for those of you joining us, this is a continuation from episode 34. This is part 2 on assignments. And like David Korman said, I think we're going to do quite a bit more of these just because there are so many different layers to peel back and so many different issues to jump into. One thing that really stood out at me, I went back and I listened to episode 34 last night, and we are in a different market. And assignments are going to look a little bit different in a shifting and changing market. So before we peel back the layers and jump into some of the technicalities and tax implications, let's talk about that a little bit.
Well, when I give a lot of assignment seminars and people ask me on the backgrounds, like, what is your feeling on assignments and where they're headed? One thing I've been saying for at least the last couple of years is I think that right or wrong from a political standpoint, the government likes to see the assignment as the real estate boogeyman or boogeywoman, as you want to say it, and saying, this is leading to our downfall because people are flipping properties and it's taking the properties away from the end users. And I always think about back in my mind when they're going to come out with the next hot political decision as far as how to control real estate, they'll think of some way along the lines of assignments. I thought they were going to go one different route, which we'll get into is Hst rebates. I figured they're going to just get rid of Hst rebates altogether on assignments. You're doing an assignment deal, no Hst rebate. They didn't go that route. They went through it with the HST overall that the person selling the assignment is going to charge. But why I'm saying this from a background point of view is people have to keep in mind is I generally don't think the government loves assignments, and I think it looks really great in the papers and on the media, on the news, on television, saying we're doing everything they can to control assignments, but assignments have not gone away. Don't know if they'll ever go away. And even when they do decide to make their tweaks in real estate, including assignments, they generally do grandfather old deals that have been signed. So if you've signed an assignment deal from 6 months ago, 3 months ago, and all of a sudden the landscape changes, generally you are safe, but consult with your lawyer immediately. One of the lawyers at Kormans will be happy to assist you on that and discuss how any changes and anything in real estate affects you, including assignments.
Yeah, and one thing in terms of the changing landscape, like assignments the last few years were done a lot of times because investors were buying these properties in advance, sort of speculating on them, on these projects, these condo projects in particular that were going to close 3 years, 5 years down the road. So they were jumping in and builders were allowing people early on in the projects that want to get sales on their board to have some assignment rights because they knew that these were investor people and everything. And that's sort of what the government to some degree is going after. But now that the market has shifted, the reality that we're now facing is there's people, they're bona fide purchasers, users that wanted to move in. All of a sudden, 3-5 years later, they said, okay, when I bought this a few years ago, I pre-qualified for a mortgage, but now the rates are higher. now I can't afford to close this transaction. I can't afford, the mortgage that I thought I was getting 3 years ago. And so in order to protect my deposit, I got to assign this to somebody else because I really can't, as an end user, afford to buy this anymore. So we're seeing those type of assignments come on, and the government's got to be really careful with what they do, because those are real people trying to not make a profit on this, but they're trying to get their money out, try and find a way to protect all the deposits that they've made.
And if I, oh, go ahead, David.
Sorry, it's so funny because as the market shifts, there's different people wanting to do different stuff with what their final intention is, right? And as the market keeps going up and we're seeing all this appreciation being made, it's the investors trying to cash out. But as the market shifts and corrects and starts adjusting, then we're seeing real people trying to protect their deposits, not being able to close and trying to get some of that money back. And let's be honest, these deposit amounts are substantial. I mean, some of these projects range from 20 to 30%. I mean, 20 or 30% of $500,000, 600, 700, 800, 1.5, $2 million. I mean, we're talking about a lot of money here on the line.
And I guess for the listeners, to give them kind of a background to understand where this all came to be, the example I always give is, let's say 10 plus years ago, and what I was seeing as a younger real estate lawyer in the market. And times were a lot different back then. And I think it was, I'm not gonna say a few bad apples, but people that were taking advantage of a system that somewhat needed correction. And what do I mean by that? So somebody goes to a builder's sales office and signs a contract to buy a new construction, let's say condo unit. And they say to themselves, if I flip this thing in a year or two, I'm going to make $100,000. So I'm the smartest person in the world. I'm going to buy 5 units. So that's going to make me $500,000. And because I'm selling a contract, I'm selling a piece of paper. I never owned the real estate. I don't have to pay tax on this whatsoever. So I'm making a clean $500,000 and I go off on my merry way. And eventually CRA smartened up to it. And Revenue Canada said to themselves, you know what, and this is the way it was explained to me from the ins and outs as far as in the office there, and may not be 100% correct, but this is how it's been explained to me over time. They said, you know what, instead of going after little business, for example, to see on their tax returns, we're better off going after new condo projects altogether. So when a condo gets built, when the actual building gets built, and then they go to final registration and people own the units inside the building, CRA has a list. They have a list of all the original named people on the agreements of who was supposed to buy it. And then they have the list of the people who actually physically own it now. And when they don't match up, you're going to get a letter and it's going to say, you're not the original buyer. What happened here? There's tax implications. And so all those people that went off and bought 4 or 5 units back in the day, they won't be able to do that now because they're going to have to pay taxes on that. And that's where it all really began in my book. That's where I started to see the shift. And when you start to see a shift on one tax, you're saying, oh, wow, I think we're missing out on other taxes here. And then the ball starts rolling because there's so much tax implications with this.
It's really basic supply and demand. I mean, David, I see you're wearing a Raptor shirt. How much do you think tickets to tomorrow's games are going to be? I mean, I'm in the market. I want to go to tomorrow's games. I want to buy a ticket. And, I have a feeling I'm going to be paying quite a bit of money for a ticket I could have bought, at the box office for a lot lower. And I mean, this is really no exception. This has been going on for...
Well, it's a great parallel, like Jonathan was saying, the government, it's amazing how whenever they pass a piece of legislation, it doesn't matter which government it is. So it's not really a political statement because they all do the same thing. They jump in to say, how can we get a piece of the action here? It's no different with the NRST raising it to 20%. It's not really curbing investors, foreign investors. They were getting 15% of the action. Now they're getting 20% of the action. Same thing on assignments. They're getting land transfer tax. They're getting HST. They're getting capital gains. They're just looking at how do we share in these things. And MLSE with the Raptors and the Leafs does the same thing. Like they figured out a few years ago, okay, playoffs are coming. We're going to jack up the prices a little bit to our season ticket holders. Anybody's going to buy a ticket to the playoffs. Then they realized, aside from, no matter how high they made the price, there was still another level that people would pay to get tickets to these games, right? So for a while, they were letting their season ticket holders scalp those tickets to other people and make a couple $100 a ticket for a playoff game. Those days are now gone. The prices are so high for playoff tickets, for Raptors and for Leafs tickets, that even if season ticket, they're buying it, they're hoping to get their money back from anybody that'll buy the tickets from them. There's no margin for that profit anymore for a season ticket holder to get by scalping their tickets, because MLSC figured out, no, we're going to put the prices up high enough that we're going to get all the money. That whoever's buying a ticket and actually showing up at the game, we're getting all the money from it. And the government's doing the same thing with assignments and NRST.
I love these metaphors. And when you tell me about MLSC with the tickets, in my mind, I'm saying to myself, is he talking about the government now, or is he talking about the builder for the consent and what they're charging? Because they're not much different, because they're saying,
right.
I said that I would agree to give you the assignment consent, but I can unreasonably withhold it. So I've decided to exercise my right to be unreasonable, but give me $30,000, I'll be reasonable again. You know why? Because I know you're making 100K, so I want my share too. So you got the government, you got the builder, you got the assignor, and everybody needs to figure out what piece of the pie they're going to get. And that's where when I have a new assignor or assignee that comes to the office and says, help me with my assignment, I tell them, first of all, whether you're buying an assignment or selling an assignment, it's very different creatures right away. So let's think about that. You have very different considerations. It's not that it's good or it's bad. Just go in with eyes wide open. Sit down. Let's do the math of it. Let's figure out what the ramifications are. So then you can make a proper business decision. I think the people that end up getting very unhappy on assignments in general, ones that jump in, just think they're going to make $1 million and don't actually sit and do the mechanics of the math. Like any business, like selling an assignment is like running a business. What's your revenues? What's your expenses? And what's your profit going to look like? And if you don't do that math and figure that out, you're going to be in for a rude awakening. Same thing for somebody buying an assignment. When somebody signed a contract with the builder and you're buying that contract, it's like the name is rubbed out. It's your name now on that contract. You signed that contract. You didn't choose to read it. You didn't choose to go to a lawyer. That's your problem, but that's your contract now. You've agreed to do everything in here, plus pay all these extras. You think your purchase price on the assignment is the price? No, there's also extras that are going to go to the builder. You got to read through that. You got to understand what you're doing.
And then you got to understand the tax implications. So maybe we should get into that.
Out of my mouth. That's probably the biggest thing that people really, that's like the monkey in the closet, and people do not think about the tax implications of these decisions that they're making. And there's a lot to consider.
People say, I'll be fine. I'll be fine. I won't worry about that. It's not a big deal. I've had the clients, I can't name them for obvious reasons, but they get the lovely letter from CRA. Then they go and they vomit in the bathroom, and then they call me, and then they call the accountant. Once you get that letter, Pandora's box has been opened. We cannot run away from that. We're going to have to deal with it. And it's something we should have talked about from day one. You should have talked about with your lawyer and your accountant and made a game plan, because it could happen, certainly.
Well, the other thing that I warn people about all the time, sometimes think, okay, if we get this deal closed and figure all this out and we close, then we're good. But no, CRA can come back and audit you 6-7 years later on some of these issues, right? So if it wasn't right, even at the time of closing, you might think you're home free, but they come back at some point down the road and say, hey, you didn't pay enough land transfer, or you didn't pay the HST rebate wasn't done. We want to claw that back. Or there's HST payable on the profit, or there's capital gains. They have the right to audit and come back and not accept things that were done on closing. So just because you close a transaction doesn't mean the tax boogeyman has gone away. So that's why these issues have to be addressed properly.
We have to put a disclaimer here immediately, and this is very, very important, because Jonathan, David, Kormans LLP, Summit, we appreciate the fine work that the CRA is doing. They're great people over there. Keep up the great job, folks, if you're watching this. And I have to say that the last couple of phone calls I've had to do on files, they were very, very helpful. I have to say, they really took the time for me and really explained everything. I've been very impressed with the service at CRA. Thank you, CRA.
We might delete.
And we know CRA watches this religiously. So
yes, I don't know. We'll just agree to move on from this statement Jonathan just made.
So maybe we should get into
taxes.
Land transfer tax as the first issue that sort of comes up, okay? Because land transfer tax is payable on closing. We're closing the transaction with the builder. So this is now the assignee that's closing with the builder. and you have to pay land transfer tax based on the value of the consideration. So the builder's lawyer will do a statement of adjustments based on the original contract and say, here's the value consideration. So here's the transfer, here's the land transfer tax that your calculation that should be paid. But Jonathan?
Over half of assignments, at least in my estimation, being closed are being paid on the incorrect amount for consideration for land transfer tax. The assignee, the new buyer, when they're closing with the builder and the builder's lawyer plugged in what was the consideration amount, how much they paid with the builder, the assignee is not supposed to pay land transfer tax just on the amount with the builder. It's the amount that they also paid in the profit to the assignor. That's the real price. But it's up to the assignee's lawyer to plug that into the transfer into where the calculation happens for land transfer tax. And that right away is error number one that you tend to find on assignments and can be come back to. So when assignee gets the letter saying, you do not pay sufficient land transfer tax, that comes back on the assignee's lawyer. They were responsible to plug in that amount.
So who would really truly be responsible for that? With title insurance? Like, is there title insurance for closing assignments?
No, that's a lawyer issue.
There is title insurance, yes, but not insurance for stupidity in that sense, for responsibility. Like that is just an ABC item. That's just human error because they didn't train their mind to understanding the tax ramifications. And because people are saying, I don't want the builder to know how much we paid. Well, regardless of what you want or don't want, when it comes time to close, you do have to pay the proper land transfer tax. You have to plug in that amount. When the builder sends you the transfer, the deed, and the calculation in the computer, you have to plug in the new amount so that you're paying proper land transfer tax.
Yeah, so just to put simple numbers to it, let's say they were buying from the builder for $400,000. The assignment price was $500,000. The builder's lawyer will send an adjustment saying, hey, it's $400,000. Here's the draft transfer, land transfer tax calculated based on that. It's up to the assignee's lawyer to go back and say, no, we're gonna, our actual price is $500,000. We have to change the land transfer tax affidavit and pay land transfer tax based on $500,000. And there's a lot of lawyers that don't do that, and they don't pick up on that, or they don't understand that, or they just don't. And then the builder's lawyer doesn't care. Builder doesn't care. They'll close, but the government will figure it out at some point, and they're going to come back and say, you didn't pay land transfer tax on $100,000. So we want you to pay that plus interest, plus penalties, or we'll take your firstborn.
And if it's in Toronto, and if it's in Toronto, you got 2 land transfer taxes. So there's 2 amounts to plug in.
Very interesting. Okay. And you guys are seeing these errors come up pretty often.
Well, it's certainly we can say for certainty that when we talk to other lawyers and we're dealing with other law firms, one of the things is to have it. I think we talked about it in our previous, in episode 34, I believe you said, when we did part 1, and in order to have an assignment closed properly, you have to have 2 good realtors, 2 good lawyers, and everybody has to be able to discuss properly. One thing we find is as lawyers, a lot of other law firms don't want to do them. They don't understand them, or they just don't like them and they're scared of them. And that creates a lot of conflict and issues. And I'm finding very often, I'm dealing sometimes with lawyers that have 10, 20 years more experience than me. I'm still teaching it to them because they just don't train their mind to it. And that's a big problem. So just a lack of understanding because they don't do them enough or just don't bother to learn them enough.
Yeah, and to those lawyers that don't do them all the time, they get a draft deed from the builder's lawyer, and they might have been thinking, oh, we should be paying land transfer tax on the full assignment price, but they get a draft deed with the land transfer tax from the builder's lawyer, and they go, oh, this is great. I could save my client land transfer tax on the profit because we're just going to follow this. And they blindly do, and until eventually the government comes back to them and say, hey, you didn't pay enough. And there's interest and penalties on that, and you should have known better. So if you're from a lawyer's point of view, they're going to lose repeat business from those clients once they get those letters. That's for sure. Not good for their business. So that's a hard lesson to learn. So,
and that's just one tax item. There's many tax items.
HST is more confusing.
And HST is also broken down into 2 different segments. So when it comes, that's the other one I could say as far as tax item number 2, it's 2A and 2B, because if people throw out HST, well, the first thing I tell them is, which part of the HST do you want to discuss? And then their eyes open up. There's more than one HST issue. Absolutely. I think we should jump into the easier one, which is the HST rebate.
Okay.
Because a lot of people don't understand HST rebate and how it works. And I tell people just very simple. You go to buy new construction, you're buying a new condo unit. You're never mind assignments right now. You just bought the new construction unit from the builder and you see your price is $500 all in. Well, just to understand how that works, the HST overall is baked into that amount. So from that 500,000 when it's collected, the 13% is remitted, but the builder knows that the government is giving back a portion of that full HST, and it's called an HST rebate. Whether you're going to live in the unit personally or an immediate family member, or you're going to rent it out. So the builder comes back and says, you're the original buyer and you're telling me you're going to live in this unit. I'm a good person. So what I'm going to do is I'm just going to charge you $500 all in, HST all in. Don't worry about it. But you're going to sign some paperwork so that the HST rebate that you're supposed to get, you're going to give it to me. But I'm not going to charge you for it. I'm just going to go apply for it afterwards. You're going to send the paperwork. I'll take care of that. I'll get it after closing. You do nothing. You just pay me the 500, call it a day. But you better qualify for it, because if not, I'm going to come back to you for it. And that's where it all begins. It's HST rebate. It's about $24,000 depending on the value of the property. It's on an escalating scale. So as the price changes, the HST rebate changes, and then it stops at around 24. So what will happen from there is when you start getting into assignments, the first question is, will we even be eligible for the HST rebate at all? And that's another very big misconception. A lot of information thrown out there. So I'll just put it out for clarity right now to be very clear. In Ontario, you're doing an assignment deal and you're looking about the HST rebate. If you're the assignee, most builders will not give you now the HST rebate, period. They're saying, I understand that this building was never built. It was never occupied. You're the first person, but it's an assignment deal. So I don't really know now if I'm eligible or not. So to make it fair, I'm just going to charge you this amount on closing. You go get it afterwards. So we need to, and that has been a deal breaker for me on some assignments. So first of all, understanding assignor or assignee about this HST rebate, and then coming to the lawyer, we start sitting with you and the very different clauses in the agreement, whether you're going to be selling the assignment or buying the assignment. Because if I'm selling the assignment, the assignor, I don't care if you're getting the HST rebate or not. Good luck with you. I sold you the property. Leave me alone. Have a nice day. Assignee comes back and says, wait a minute, if I don't get this rebate because of you for some reason, I want to be able to put a clause in there. So there becomes some sort of negotiation there. So bottom line is just to understand, first of all, that there even is an HST rebate, how to qualify for it. And on assignments, not all builders will agree to give it to you. Some I've seen that you need to negotiate it. They'll agree to give you in writing, but very few will. So if you're buying by assignment, note that there's an HST rebate application. And for that, you're going to be charged. That's the first portion, I would say, of the HST issue on assignments.
And that was the simpler one.
And if you remember,
that was the simple one.
Yeah, that's the easy one. The last session that we had, we talked about there's a three-way agreement that has to be entered into between the builder, the assignee, and assignor, where you're basically getting the consent of the builder to the assignment transaction. So most builders these days are building right into that one of the conditions of them granting the consent is we're not going to deal with this HST rebate issue. We don't want to get into it at all. Like John said, you guys figure it out. You can apply for it after closing. We're not giving you a credit on closing. We're not doing anything. You're going to pay us on closing that 500,000 purchase price plus the 24,000, because we don't know whether you're going to get the rebate or not. We still want that 24,000. We don't know if we'll get it from the government. So we want it from the assignee, right? And then the assignee may be able to apply afterwards to get it from the government, but whether they're successful or not, it depends on the assignor's position and what happened to the property too. So it's complicated.
And what we have to take it on a case-by-case basis, and that's what CRA does, because it's not so simple. Let's say, for example, the assignor, the person who bought the unit, got occupancy. So they got the keys to the unit. They don't own it yet, but they have the right to occupy it. And they say, oh, I never lived there. And so don't worry, it's safe. It's never been occupied. And then after the assignee closes, CRA goes on Kijiji and finds out that the assignor tried to rent it out as an Airbnb. Guess what? They're going to be disqualified then for the HST rebate. So what the assignor did can potentially affect the assignee on an HST rebate. That's why there's so many cans of worms with this. And that's why a lawyer has to understand how assignments work and protect either their assignor or assignee clients, because these circumstances can shift. And that's where, for example, I would have the assignor sign a declaration with their lawyer. I swear I bought this with the intention to live there personally. I swear nobody's ever occupied it. That sworn declaration. If there's an issue, at least you can go to court and say, I have something legally in writing, in which case that's fraud in my mind. That they blatantly lied on a declaration. So that's why we want to have that type of paperwork. But without having a clause in the agreement, the assignor does not have to give you that. All I agreed to do was give it to you. I don't have to swear to you what the circumstances are. Good luck. So assignee needs protection that way.
Well, interesting. We had a file in our office that didn't close yesterday, an assignment transaction. We're acting for the assignee, just like we're talking about here. We had a consent with the builder. You know, that was all done a while ago. Comes time to close the transaction. The night before closing, the assignor's lawyer sends, oh, here's a couple other documents that we need the assignee to sign. A statutory declaration saying that they will qualify for the HST rebate, and an indemnity that they'll indemnify the assignor in the event they don't get the rebate. So, but there is nothing in our agreement of purchase and sale that was negotiated saying that we have to sign that or we agree to do that. And so we're saying no, like show us where we have an obligation to sign those documents, because it wasn't negotiated. There's nothing in the agreement. The lawyer comes back and he says, I can't point to anything, but my client's insisting and I'm insisting. And he refused to send us his bank account information so we can deposit funds to his account.
Oh my God.
So we just did a certified check and had it delivered to his office, and we tendered him, say, here's the documents, here's the money, we're all ready to close. We're closing with the builder. The builders, I won't even talk to them anymore, because once the consent document is signed, they think they're out of the picture. They're only dealing with us. So they're going to close with us. But this guy refused to take our check. He says, I'm sending you back the check. He's not sending us any of his documents, refusing to close on the basis he's insisting on getting these documents that weren't negotiated for it. And, that's where we are. So, Mr. Chosen Lawyer Expert on Assignments, what do you think?
It's funny because I had a deal yesterday, same type of circumstance, but in my case, my client is selling a property and there's a tenant in the property, and all of a sudden the buyer wants our client to get a bunch of documents signed from the tenants in the property, and as well as from them as a landlord. And I said, go to the agreement purchase sale. We do not have to give you anything. It doesn't say in there that we're agreeing. So it doesn't say that we're providing to you. We ain't providing to you. Case closed. So what I'm thinking when you're saying this, David H., I had a circumstance with a builder where I got a consent, but they said in there, we're going to collect the HST on behalf of your client, the assignor, and remit it to CRA directly. So I got this lawyer on the horn for the builder, and I said to him, I wanted to meet you as a future celebrity because you're creating new law here. Like, you are creating new precedents and like you're trailblazing. And wow, like good on you. But what the hell are you talking about? And I start walking him through it, and he goes, no, that's how the accountants are doing it. I said, why would you possibly, as a builder, want to get involved with HST that has nothing to do with the transaction between the assignor or assignee? You don't have privy to that. What do you want to jump in, collect HST, take the responsibility and remit that? Think about that for a second. You're overreaching here. So he says, I'm going to get the accountants on the horn from the builder's end. Let me see what I can do. I'm going to find the expert accountants, as he said to me. Took him 4 days to get back to me. And he comes back and says, you're right. We're going to change our consents. We've been doing it wrong. And it just doesn't make sense. And like, listen, I may not be the smartest man, but I know what love is, also Forrest Gump. But in all seriousness, like, it's common sense. It's just common sense. I don't want to jump into a transaction that I'm not involved with, put my nose into it, collect HST money and remit HST money. I don't want that responsibility. And so I said, by all means, put in there an indemnity saying, I have nothing to do with this. You're responsible for your own HST on your transaction. But that's where, and they must have been doing this for I don't know how long. And I said to myself, wow, like, how many of these transactions went on? They've been going and collecting HST and nobody else is doing this. And nobody bothered to step up and say, hey, I think you're doing something silly here. And that's where, you have to have the experience in it. You got to read the documentation and stand up for yourself. And I've done that on consents. I've done that on assignment agreements, on closing documents, like David did there with saying, no, we're going to stand up and we're still closing regardless. We cannot be bullied. Like I always say, I do not negotiate with terrorists. If I know my position's good my client's position is good. The client has to make the determination, give the instructions, but don't just accept it because you say, oh, I don't want to fight about it. No, stand up for your rights.
Well, and that's why these type of things have to be brought up at the time of the negotiation of the assignment agreement. Like these issues have to be negotiated right there, because like in our scenario, there could have been something negotiated right there saying that the assignee will indemnify the assignor and they will take responsibility and they will sign these documents. But that has to be negotiated right into the agreement. If it's not there, the lawyer can't just stand up and say, oh, we didn't negotiate it, but I'm insisting on it. There's no such thing as insisting on it. You have to follow the contract.
You're dealing with David Gorski and his team, for example, and they're going to bring you an assignment. You better bet that they're going to put in there a lawyer review clause, whether it's an assignor or assignee. If you're a realtor watching this right now and you're saying, I'm getting into assignments, I'm not really sure what to do. If nothing else you're taking from this, remember, put the clause in your Schedule A saying, assignor, this is conditional on review by their solicitor. There, that makes a big deal. And then before you waive that clause, put the email in and say, just checking, did you review with the lawyer? Are you comfortable? And if they come back and say, no, I didn't want to review it, I heavily advise you to speak with your lawyer and your accountant, making sure you cover yourself before I waive this. So from a realtor's point of view, you should know there is landmines here, but if you know what you're doing and you bring in the other professionals, you're putting yourself in a much better position.
Yeah, I want to just sorry, David, I want to make one other point here, because like Jonathan's right, like, most of the people that watch this and listen to this are real estate agents, right? And I think we probably confused some agents out there because they're thinking, wait a second, they're talking about HST on a residential transaction. What are they talking about? I deal in the resale residential transaction market most of the time, and there's no HST payable. I know how to fill in that form, and it doesn't matter if it says HST in addition to the purchase price or not in addition to the purchase price. There isn't going to be HST payable to resale transaction. How come they're talking about HST in the first place? But because the reality is HST is payable on almost everything we do, every service, every product. The rule is HST is payable unless there's an exception. Used residential real estate happens to be an exception. And a lot of agents just forget that that's really just an exception because they're used to dealing in that market. They're not focused on it. So on new construction, HST is actually payable on the purchase price. It's just what the builders do is they say, for selling this condo for $500,000, we're telling it's $500,000 inclusive of HST, but HST still is payable, and they've got to remit HST based on that. They don't sign their agreements based on it's $475,000 plus HST, and you get to $500,000. They're not done that way. So just to clarify that, HST is payable on real estate transactions unless there's an exception. Used residential happens to be that exception.
And then to clarify David Korman's clarification, I just had to, I'm so sorry to say this, David, but it has come up a couple of times, at least, where you have a property that has been substantially renovated. The person's been living in there for a day, but it's been substantially renovated. They may be considered new construction. People say, oh, I have a vacant piece of land. This is for residential purposes. HST shouldn't be applicable whatsoever. Don't ever take anything for granted. If there's any kind of slight tweak to it, check with your accountant, check with your lawyer. We have to have these discussions. We're not going to give you the tax advice for it, but we're going to give you the roadmap. But certainly you have to sit with your accountant, because even the residential properties, yes, I understand you resale condo, resale 20-year-old house, absolutely. But some of them do have a little bit of exceptions. And if you're a realtor listening and you send a text message to your client, yeah, your substantially renovated house, you know what? I got you. It's good. It's resale. Don't worry about it. We don't have to charge HST. When your client gets the HST bill and you assure them there's no issues, you have professional liability there. So I always tell the professionals as realtors, speak to your lawyer, speak to your accountant, speak to your lawyer, speak to your accountant, cover yourself and put that in writing, please. Text message, email, whatever you got to do.
So David H., going back to that example that you gave us of this other lawyer refusing to close, what's the solution here? Because if you really look at the technicality side of it, and the builder not even really wanting to talk to them anymore, because as far as they're concerned, they granted consent and now they're dealing with the assignee. What's like from a legal point of view, what happens next?
Well, to be frank, the reason I raised this in this podcast is I was hoping that between the two of you guys, you'd figure out what the answer is, because I don't know what the answer is. We're trying to figure this out. But the reality is we can close with the builder.
Yes.
Okay.
So they signed, every party, the three parties signed the consent. The consent is
Yeah, that's done. So we have the right to close with the builder.
absolutely.
Problem is, builder gave the keys already to the assignor. Assignor doesn't want to give us keys. So we're trying to figure out,
That's where I'd be changing the locks, my
we're
friend.
gonna go back to them, ask to change the locks. Okay, so we can still, like, the builder will be, they just want us to close with them. They're gonna just want our money, right? They want to close the deal. Okay, we might have a lawsuit with between assignor and assignee if we can't work out these terms, because we're not going to indemnify them for this thing, because there's nothing they could point to that says we have to. They're refusing to. I don't know why they don't want their money and move on. Like, to me, it doesn't really make sense.
That seems like they're getting some bad advice from the lawyers. And I mean, I've seen this so many times where lawyers, ruin deals for clients because of technicalities. And, my rule of thumb is always, take the money first. And then
ask questions later.
Ask questions later.
And
right.
Work through some of these details, right? But take the money. Like, if somebody's giving you certified funds, take the money.
Yeah, I agree with you. Take the money and say, we reserve our rights after closing. If the HST issue, hits the fan and comes back to us, we reserve our rights to require you to indemnify. And we could say we deny your right, but we can go have a lawsuit over that down the road if we have to. But take the money and close the transaction in the meantime.
David Korman, I had an assignment deal that almost didn't close because I was acting for the assignee. The assignor's lawyer refused to get signed for me a undertaking to readjust and a declaration of residency. And they said to me, it's not a real estate transaction. Why am I signing real estate closing papers? And I said, we got a big problem here, man. And why, we were talking about taxes and we didn't even throw the residency part of it. But guess what? It is a real estate transaction. No different. If I bought a resale house and my seller was a non-resident of Canada for tax purposes, and they don't remit the proper monies for a clearance certificate, I'm on the hook as a buyer. It's the same thing on assignment purchases. So the same piece of paper I would get from the seller saying I am not a non-resident for tax purposes, that's all I was asking for. I was also asking for what's called an undertaking to readjust, which on every real estate deal, a buyer and seller sign, saying if on the bill from the seller anything is missed or miscalculated, both sides agree to readjust it. Very simple. But on a very, very clear technicality, somebody to understand this is a real estate transaction. If I close without those documents, I'm putting my client in a really bad position, and I won't do that. But then I start to think, how many assignments close where people aren't getting the proper paper signed? Like, that's alarming to me.
Yeah, and that's a big one, because it's one of the quirky things about the Income Tax Act, Section 106 Income Tax Act, that it actually places the onus for making sure that the seller, in this case, the assignors, if there's any taxes owed, because they're a non-resident seller, if they owe the government any taxes, they put the onus on the buyer, that if they don't pay their taxes, the buyer's responsible for it. So then it's up to the buyer's lawyer and the seller's lawyer, in this case, the assignor and the assignee's lawyer, to make an arrangement between them as to, holdbacks of money and making sure the proper undertakings are given to cover that, because the onus is, under the Income Tax Act, is passed to the buyer. It's a very strange way that they've set it up that way. So we got to be really careful. And I think, like John said, like, how many assignment transactions are happening where nobody's even putting their minds to the fact that the assignor might be a non-resident?
So yet another lovely layer that we didn't even originally bring up. And we still got two more tax ramifications we said we wanted to bring up. We talked about HST issue number 1. There's HST issue number 2 now. And it's called the HST on what they call the profit, but the profit is incorrect. It's not HST. So if you're an assignor, you're an original buyer, you signed the contract with the builder, you're now flipping that contract, you're supposed to collect HST from the new buyer, the assignee, but it's not on the profit you're making, it's on the flow of funds received from the assignee, which blows my mind. It's not only the money that let's say you sold it for 500, you paid 400 with the builder, so you're making $100,000 in profit. You're not just collecting HST on that, it's on the original deposit. So when you put down $50,000 with the builder and the assignee is reimbursing you back for it, you have to collect HST on that too. So it's not HST on the profit, it's on the flow of funds. So in fact, CRA is double dipping HST there because in that original deposit, there's HST baked into it from the, so that kind of is interesting, but it is what it is, so to speak. So, and this is like late breaking stuff because it's part of the new budget 2022 in Canada. There will now, we in previous, before this, we always told assignors and assignees there's a risk you're going to be charged the HST on these funds, but we did not have the clarity. Now we have the clarity. Going forward, this is what it's going to be. So now we have to watch these assignment agreements, whether the assignor is charging HST or not, because if the assignor does not put in HST in addition to the price, they can't collect this HST on top of the assignment monies. So now out of the profit that they're collecting, they're going to have to remit HST. So the question is, who is responsible for this extra layer of HST? Is it the assignor or the assignee? And it's going to come to one little line in your assignment agreement, HST included in the price or HST in addition to the price. So if you're a realtor and you're acting for the assignor or assignee, think real hard about it, which one you're putting down, and put in writing to your client, there's a ramification here.
Wow. That just blew my mind. That's, I can just imagine how many lawyers would struggle with so many issues and assignments. Because I mean, they're quite complex. Like when you really contrast them to the regular residential transaction, right? Like, I mean, there's deposits, there's HSTs, there's residencies, there's land transfer tax. Like, I mean, there's deposits that have to be reimbursed. There's a whole bunch of things that need to be done, including consent. So very complicated, quite different from your regular transaction. But the one thing that stood out to me the most over these last two sessions is getting a clause, whether you're representing an assignor or an assignee, for a lawyer to review, right? And part of that process, you have to involve the accountant, and you have to really get, the lawyer and the accountant to really explain these issues to the assignor or the assignee, because they're complex. But if you guys take one thing away from our discussion, one thing only, put in those lawyer review clauses, because it just creates a more transparent and more professional environment for your buyer or your seller.
I think that in fact we should
agents are afraid of that too, because when we do get that in, then what do we do as lawyers, whether we're on the assignee side or the assignor side? We're usually reviewing it and coming back and say, hey, you got to add these 5 clauses in order to protect your client. And the agents are going, well, you're going to blow my deal. We got everything worked out here. We got all the numbers done. We got the deal done. And now you're going to ask these 5 clauses. Now they're going to go back to their lawyer and see if they're good. And I don't even understand what these clauses mean. And we're just trying to protect them. But there has to be this renegotiation. But the reality is it might blow the deal, but it's better for the deal to blow than to be done incorrectly. And sometimes agents don't appreciate that. And they think we're getting in the way of their deal and we're going to cost them commission. But I'd rather cost them a commission than cost them a lawsuit.
That's exactly what I was thinking. You're saying, I want to get this commission. Please don't blow my deal. When the S hits the fan and it's done incorrectly, and now you get the call from RICO and you got to fill out those forms and you got a lawsuit, you got to go retain a litigation lawyer, you got to talk to your insurance. That's a hell of a lot more time and money. And you'd rather have the blown deal and just move on to the next deal than have to deal with that. And if you don't do it professionally, that's the risk you take. David Gorski, I think we should do something revolutionary in these clauses. Maybe we should create it today. It shouldn't just be a lawyer review clause because it has to be in writing anyways. I think it should say lawyer and accountant review, because that is the real, because for us, what we do say to our clients is we're aware there are tax issues. These are the things you're going to think about, but we always recommend to go to the accountant because we have to do that as well. It might as well be lawyer and accountant reviews. And for nothing else, from the assignor's point of view, because we covered all the other tax items, when the deal is finally closed, guess what? They're going to get another tax bill, and it's going to be either capital gains, but it could be business income, depending on what you are, who you are. I know a lot of realtors that like to flip properties and like to buy a lot of deals under assignments. Guess what? As you're a professional in real estate, you may be taxed as, even if it's only your first assignment, you may get taxed as business income, not as capital gains. And if you didn't speak with your accountant ahead of time, that's a problem. So when we're saying, like, make a business plan, know all the ramifications. Imagine you got the consent, you dealt with the HST part of it, you dealt with land transfer tax, you finally got the thing closed, you still got a tax bill coming, and you may not even know what that is. That's why you should know from the beginning what to expect.
Yeah. So
You know
there,
what?
the $100,000 profit you thought you were going to get is now taxable, and you're getting half of what you thought you were going to get, or 3/4 of what you thought you were going to get.
And then paying HST on the deposit, which is further dipping down to that 100,000.
Exactly.
Now you're walking away with $32,000
Right.
plus legal fees, maybe $29,000. And that $100,000 is not as appealing, as it was at the beginning. But Jonathan, I completely agree with you. And I think I'm going to go one step further. And I think what I'm going to do at my brokerage is I'm going to make it mandatory that any agent that transacts in assignments, whether they're acting for the assignor or the assignee, I'm going to make it mandatory for them to put in a lawyer review and accountant review clause in each and every single agreement moving forward, because I think there's just far too many issues for agents to have a free reign and be able to do these transactions without soliciting the help of professionals. There's just it's way too complex. There's a lot going on here. And I think it's going to make for a far better transaction if that's the way we do it moving forward. And of course, anybody listening to the David and David on Real Estate podcast, is getting this information firsthand. There's a lot of great information here, and I hope people take advantage of everything that we're doing here, because it's complex and there's a lot of issues here, and these rules and regulations, as Jonathan pointed out, keep changing almost on a weekly basis. I mean, the last podcast we did was 10 weeks ago, and the landscape looks very different, both on the market segment and on the regulatory segment from the last time we did this podcast.
Imagine we have been doing tax talk every single week. This week, guess what? The foreign buyer tax has been increased from 15 to 20%. By the way, this is now new week number 2. Foreign buyers are now banned for 2 years. So the tax went up and now you're not allowed to do it anyways. Like, it's amazing what goes on in the tax world and the real estate world. It is changing right now every week, like you said.
Yeah.
And I don't want any of this to discourage people from doing assignments. Like, there's going to be a need, as we discussed at the beginning of this podcast, for more assignments, because people are going to have a need to try and protect their deposits, and the landscape has changed. So we just want everybody to understand that assignments are great, and people can still make profits on them sometimes, or people can just at least get their money out, and they should still do them. But you've got to be careful in how you do them. Agents have to be careful. The assignor has to be careful. The assignee has to be careful. You got to do it properly, because there's so many landmines. So we're not saying don't do them. We just be aware of all this and make sure you do it properly.
And for those young buyers out there, or anybody in that fact, but I have a lot of clients that are first-time buyers, never bought before, and they're buying by way of assignment because that's what's available. There's no inventory. They're not finding enough inventory. It's not much different than if you had gone and signed the contract yourself with the builder. So you're taking over somebody else's deal. As long as you understand what you're paying and everything else, you still get to purchase new. You may still get some choices on the course selection, depending on what stage it's at. You're the first one ever living in there. You're not going to have to go sign and wait for another 5 years. You know that it's going to be ready in 3 months, 6 months, whatever it is. So there's a lot of reasons why people are coming saying, I want to buy by way of assignment. The price makes sense for me. I want to buy new, and I just don't want to wait, which is fine as long as you have an idea of what your costing is going to be, so you can make your plans accordingly. That's it. Like, never budget to the penny. It's real estate. There's always going to be costs involved, whether there's additional closing costs or you have to go and do some work on the property. That's how real estate works. So make yourself always a buffer amount of money, but there's a lot of reasons why people love buying by way of assignment as well.
Absolutely. Guys, I think that's great for one session. I mean, I think we covered a lot. There's still a lot more to cover. So expect a part 3 coming at you at some point. But
just one clarification, David Gorski, please, because I said in the other episode, I know people call me the assignment king of Toronto. I do other transactions than assignments. You could send me simpler transactions if you're a realtor, please. I can close almost any real estate transaction in Ontario. I don't have to do just assignments. Some people think he just does assignments. I don't just do assignments. I promise you that.
I don't know how anybody would survive and be sane if all they did was assignment transactions. Like, even when you know what you're doing, like, they're hard. Like, there's issues, they're tricky. Like, we've gone through, doesn't matter on the assignee side, assignor side, like, they're hard. Each one is unique. Each one has its challenges. But like Jonathan said, send some easy stuff too. We got to have some easier normal transactions that close close on time in between to keep us going.
Awesome, guys. Well, listen, Jonathan, always a pleasure to have you on. Absolutely amazing. Thank you for diving in. Thank you for sharing your knowledge. Really, really appreciate this. Thank you for your time, and everybody stay safe. And David Korman, as always, lots of fun doing these together.
Yeah. Pleasure, guys. Thanks.
See you
Thank
guys
you again
next.
for having me. Thank you.